Good afternoon, everybody. I believe we are live here, and today is Wednesday, December 15th, 2010. We're just going with the screen here today. But let's take a look at the 1 minute chart to start out here of the S&P 500. It was a pretty choppy session here, obviously, and it was a down session. We lost 57 cents in the SPY right now, and you can see that once we broke below the pivot and the volume weighted average price here at what time was this? Right about I don't know, 10:45 or so Eastern. The market stayed below that volume weighted average price, and we saw a couple drives lower, actually 3 drives lower. It was kind of surprising, actually, to me that this late day sell-off held. But anyways, when we take a look at the 10-minute time frame and we frame it with a 5-minute or 5-day moving average, there's a couple things to notice here. First of all, let me just back that. Sorry about that. Let me put one more day on here. We'll go 12 days just so we can get the month of December in here and what has been the relevant trend line. You can see that the relevant trend line has been broken too, and that occurred right right at about 12:30 or so today. We do still have a rising 5-day moving average, but the market's below it. And when you look at the pattern of the last day and a half, that is, we do have lower highs and lower lows, and that remains the most important thing when you're trading. I often talk about the market on the intermediate term is innocent until proven guilty. Well, we have a rising 5-day moving average, and I still believe that to be the case. But it turns the more to kind of I guess like the light goes from green to yellow here when we start to close below it, and we're finding a little bit of resistance maybe at it late in the day. The market did hold this 124 level. I was looking for it to come down to 123.80, which was prior support and actually the daily S2. So it fell short of where I thought it was going to go, but the market short term is in a downtrend, and intermediate term becoming more neutral within a daily uptrend. So we've got 3 trends here. If you say, what's the trend? Well, it depends on what your time frame is. If you're a day trader, you should have been focused primarily on the short side here today. And when we take a look at the advanced decline line, it reveals that up until about that 12:30 break of the trend line, from the December lows, it was pretty choppy back and forth action. But when we broke that trend line, that's when the advanced decline really started to deteriorate, and you can see it closed pretty much at the worst levels of the day with 2 declining stocks for each one advancer. So when we look at that daily time frame, we still want to look at this 123 as the bigger level, 122.80 to 123 as the bigger potential level of support. We've been talking about, and really, I've mentioned it numerous times here, that the semiconductors often lead the market, and the semiconductors have been showing the most weakness recently. Now you look at this daily time frame, though, we're still in an uptrend. We still have on the daily time frame what's looking like a pullback. So when we look at that pullback, you can't look at it and say, hey, that's the top. Only a fool looks at this market and says the semiconductors have made a top. There's no evidence of that yet. You can look at the weekly chart and say, well, we got up to this prior important level, therefore that's going to do it, or whatever. And again, that's the way a fool looks at the market. What we want to look at is what is most likely, were the odds. And when we look at the daily time frame, again, we've been riding this trend line and the 20-day moving average. It appears as though the 20-day moving average is likely to be tested here in the next day or two, and probably down towards this 31.75 to 31.80 as well, where we have that rising 20-day moving average and the prior resistance. But until we really break below on a daily time frame, below right now at about $30.75, we still have a pattern of higher highs and higher lows. What might occur is we get another rally with a lower high at 33, and then if we broke this, then the daily uptrend would be broken. But obviously that's a lot of ifs and a lot of unknowns. If we look at the 30-minute, let's look at the 15-minute time frame. Here's that 5-day moving average. So we had crossed below the 5-day moving average. and found some resistance underneath it. We've got these lower highs and lower lows. So it seems to me as though the semiconductors, like they often are maybe a couple days ahead of the S&P 500 in the broader market here. So when we look at that, we've got, and that's a 20-day volume weighted average price down here, by the way, which does come in at about 31.85. So that seems to me to be a likely scenario that we will continue to move lower in the SMH. We have the declining 5-day moving average right now. We've broken that 10-day. So it just seems as though 31.75, 31.80, that looks to be the place to look for this, these semiconductors to potentially stabilize after this sell-off. We might look at this market in 2 weeks and say, "Wow, that was the top," but maybe it continues down to the 50-day moving average. That's not what's most likely. And again, we want to go with what's most likely. We want to observe the price action when and if it gets down towards that 20-day moving average, and then look for signs of stability. Once we find that stability, then we can look at it and say, okay, now do the other shorter term time frames support a potential bounce in this level? And it's not going to occur all at once. Typically we get a little bit of consolidation near an important moving average, and then the buyers regain control, and then we have time to move back to the upside. So the semiconductors have been kind of flashing the warning sign in here. The S&P 500 is starting to listen a little bit. Still here on this daily time frame, it's in a giant uptrend. The only thing that we can look at and be reason for concern near term is the fact that we do have lower highs and lower lows, and this is just over the course of 2 days. So if you're a swing trader, it's probably affected some of your stops. If you're a day trader, it's affected the way you've approached the market in the last day or two. And if you're a longer term investor, this is absolutely meaningless. So you have to understand which time frame suits you best. This level, again, down near 122.5, 123, looks to be the bigger level where this market should come down and test for as far as support. If it can stabilize there, then perhaps we're going to rebuild and begin a new leg higher. Excuse me. We are in a seasonal bullish period, but but price action rules here, and now we want to look at this market. We've got this downtrend line. I would think that for this market to really kind of get back to the upside, we probably need it to clear 124.60 and hold there for a half hour or so. That would keep us above that rising 5-day moving average, and then we could look at this market maybe as here was a little bit of a shakeout, and we're going to get a short squeeze into the end of the year. There's still good action though on the individual stocks, long and short basically. We've got these IPOs that are given opportunities each day. If that's your game, it's a risky game. Today we're at this FLT, and FLT, if you look at it, from a perspective of the daily volume weighted average price, this was, this is where I started looking at it in here, and then there was a nice little move at the end of the day, towards the end of the day as well. But these IPOs are dangerous. Obviously, we've seen a lot of speculation in these Chinese names in particular. But you look at the Russell 2000. This has also been a leading group as well, the Russell 2000 that is, and it's showing a little bit of fatigue, not anything. I mean, we really can't read into it more than fatigue. I think you look at it and say, this market's had this real nice rally, and maybe it's going to correct time-wise, or perhaps we get a little bit further price pullback. We look at that 10-minute time frame. We did break some support here, and we stuck below it, and below that 5-day moving average, which is starting to flatten out. If you look at 5, 4, 3, 2, 1, this is data we're going to replace tomorrow. So that 5-day moving average should continue to advance as long as we remain basically above 77 or so, and then don't forget we have options expiration on Friday as well. So a lot of mixed information in this market. If we take a look at the Russell 2000, really the essence of trend since the beginning of this move that began December 1st, we broke that trend line briefly yesterday. We created a lower high here and then a lower low. So it looks as though the Russell is starting to undergo distribution and might be due for a pullback down towards 76.5. This is probably 76.40, let's call it. Breaking below 76.40, I think, would give reason for maybe we would be looking for a deeper pullback, and I think the next target would be where this 20-day moving average rises up to meet the market. The 20-day moving average has been good for a lot of stocks and for the market as well, but clearly the Russell 2000 is weaker. It's, you can see we kind of had the same type of pattern, obviously, and here is the SPY, but all these markets, traded some pretty heavy volume towards the end of the day as they sold off. So that's something to be aware of as well. I think that if the market, if the IWM can get back above $77.75 and hold there for more than a half hour or so, well, then this is going to prove to be maybe just sucking in new shorts here that get squeezed. But it was kind of interesting, in my chat room today we had a little conversation or a little chat about, it seemed like the futures were selling off. That is the indexes. Let's just, the indices were selling off over in here, but a lot of the stocks weren't really getting hit. A lot of people, myself included, have been noticing that some of the bigger momentum names have been coming in a little bit quickly the last couple days, but the index has been holding up. And I was thinking, maybe hedge funds are selling, and maybe I'm reading into it too much. Hedge funds, we're trying to press the futures lower in order to get mutual fund managers to begin to sell shares of the individual stocks that they're holding on to. Excuse me. Either way, you look at stocks like Baidu today was, I hope they did get rid of that print. Baidu is one that is, it broke the support here from basically a month ago, and it's been undergoing this sideways action. We talked about this last Wednesday, I believe, or last Thursday, and it gave us, we were looking at it as potentially bullish above 110. It failed to hold that. It tried to get back up above this declining 5-day moving average and failed again. So I think a lot of people got frustrated with Baidu, and you can see that is some frustrated selling there today in shares of Baidu. The weekly time frame, maybe it's headed for a test of the 20-week or 100-day moving average down near about $97 a share. But clearly, it's time for a little bit of correction in this stock at least, and let's take a look. Actually, I wanted to take a look also at the financials. The financials have been, again, on the daily and weekly chart. They broke out, then they broke down, then they broke out. So they've been really choppy trading action in there. But what we've been trying to make is where we've been trying to make sense of these financials and where it's been best to make sense of these financials has been on the 30-minute time frame. We'd seen the break of the lower highs and lower lows. The market then turned neutral. Then we had a nice pattern of higher highs and higher lows on this 30-minute time frame. And now we broke that. We broke it late in the day yesterday and continued lower. So that tells you that had you been long, I think you should have been stopped out of your long over here. Now, does that mean you sell short? If you're an aggressive trader, sure, you can get short in here, but I still think you're fighting the direction of the 5-day moving average and that sort of thing. But if we get further strength back up to 1570, 1565, and then we get a lower high in here, then perhaps the tide is going to change back to the downside again in the financials. The oil market, if we take a look at USO, is still kind of consolidating here and looking somewhat bullish. That tried to break out, pulled back in, corrected through time after this big move, and now it's holding up time-wise. The USO is at that rising 10-day moving average, and I wouldn't be surprised that if USO holds probably about 37 and a quarter, then I wouldn't be surprised to see that the next move gets us up towards about 38.5, 39 in the USO. Gold was down about 1% today. It's clearly found some resistance in this area. It's neutral at best on the daily time frame, or neutral at worst, I guess, not at best, because at best you still look at the rising 50-day moving average and you look at a trend line and that sort of thing. It tells you want to be a little cautious in here, though. If you're a longer term investor in gold, you look at that weekly chart. It's still in a beautiful uptrend, but perhaps this is where you take a little bit of your risk off and look for maybe a lower risk entry point somewhere. I've been seeing a lot of talk about J.P. Morgan and the short squeeze that's gone on in there, and someone sent me an email that said, "Let's drive J.P. Morgan out of business and everybody buy silver." And it's funny, I guess, and I don't view J.P. Morgan as the enemy for any particular reason, but clearly, silver has had this massive rally. It's still got a rising 10, 20, and 50-day moving average. Trying to pick a top is a fool's game, but you start looking at shorter-term time frames. It's showing a little bit of consolidation, I guess would be the worst case in here. If we took a look at some Fibonacci and said, from that gap higher and the highs in this market to the recent to the sell-off lows, well, the market did find a little resistance at the 61.8% retracement of this leg lower. So maybe we're going to head down towards that 20-day moving average, but this would be, I think, in silver, SLV at least, 2730. If we break 2730, then you would look at it and say, okay, well, we have a lower high and now we have a lower low, but it's still within the context of a bigger uptrend on the weekly time frame. So it would tell you that, move to the sidelines on some of your positions, but I still don't think it's a good one to be aggressively short. There's short opportunities, obviously, in SLV and in stocks like SLW, but to me, they're day trade candidates here. They're not something that you want to have big exposure. You don't want to have big short exposure to a stock in such a big uptrend, unless you are trying to pick that top and you can manage risk and say maybe your stop will go above there. But trend trading, in my mind, is an easier, more more sane, I guess, approach to the markets. And let's see, what else did I want to take a look at here? I guess that was it. So let me see what you guys have here on Twitter. Let me do something else first. Brad wanted me to look at something, I think. But I guess not. So let's take a look here at what we have on StockTwits. And Whale Trades wants me to take a look at BPOP, which is B Popular. I think they're a bank corp. So this stock tried to break out past some resistance over here. It's a failed breakout, in my opinion. It should have, when a stock breaks past 6 months or so of resistance and you have a rising 10, 20, and 50-day moving average, what it's supposed to do, early on it should find support at that rising 10-day moving average. It should find support at the prior resistance level on a pullback. To me, it's pulled back too deep. I think that this thing has probably failed and is, unless it can get back up above and hold above probably 305-ish. You look at this 30-minute time frame, we have lower highs and lower lows. We have a declining 5-day moving average. To me, it's a failed breakout. It doesn't look like, it looks like it was a nice looking chart. What it should have done, if it was going to do what breakout should do, and this is kind of what we spoke about in the financials before, is it should have found support at this prior resistance, probably right here, and then bounced and continued to move higher and stair step higher over time up to these other levels. But BPOP to me looks like it had its chance. For now, I don't think there's any reason to be involved in it, to have a position, because the momentum clearly is back to the downside. But if it could turn itself back around, and let's just take a look at that 30-minute time frame, and get back above maybe 305, I think that this would be a good candidate for a year-end play, even well, I was going to say the January effect, but I guess it's not even down for the year, so that wouldn't make sense as far as the traditional January effect type stock. So I wouldn't suggest continuing to hold a position in it. I would say maybe if for some reason you like the stock, you set an alert at about 305, and if it can get back up to that level, then you can manage risk. But right now, it doesn't. It looks dangerous to me to be involved. And Fibline, thanks for all your retweets and mentions all the time. I do appreciate it. Let's take a look. Dynamite 633. Remember, cash is a position. Sold Rig and Baidu. Good job in there. Glad you did that. I've got my other thing beeping over here, and Tom wants me to take a look at JTX. So I think is that the tax company? Let's take a look here. Jackson Hewlett Tax Services. Let's start out with a look at the average daily volume, which is looks like 1.2 million shares. Today it traded only for 270,000. Where is it? My eyes are going bad. It bums me out. I'm gonna have to start keeping my glasses here at my desk. So average daily volume is 1.2 million. Today it did. Some reason it looks like 2.7 million. But anyways, let's take a look at the stock here. The chart looks, so it looks plenty liquid, in other words. This stock broke some resistance in about the 120 level. That resistance is holding as support for now. We look at it to see where the 200-day moving average is. And here we can see it's kind of battling that 200-day moving average. There's a couple other stocks that have done that recently too, like TASR and Eastman Kodak, which is holding the 200-day moving average. But anyways, back to Jackson Hewlett. Jackson Hewlett on the daily time frame, this resistance should hold as support. We want to see it hold basically $1.20 or so. It's nice to see it was up on big increasing volume, and since then we've had this consolidation pullback on less volume, and I'm not comparing the volume to the 20-day moving average, just I'm looking at compared to the event. The event was this big move here. So when we look at a 30-minute time frame, this is nice to see. It found support intraday at a rising 5-day moving average. Let's drill down to the 10-minute time frame. So we saw this little pattern of lower highs and lower lows. Now we have taken out, yesterday's. Well, we didn't. I think back up above. This stock looks pretty good to me. Back up above today's high and this afternoon, the afternoon high from Monday. So this looks like what 138, 139. I think back up through 138. That this stock is. At that point it makes a higher high, and I would think the stop goes right here, which is at about 125, and we have this higher low. So the definition of trend, obviously. Daily time frame, we have higher highs and higher lows here. On a 10-minute time frame, we had these lower highs and lower lows. Now we have a higher low. If we add this higher high to it, then we have a stage 2 uptrend on the short-term time frame, which is in alignment with the daily time frame, and it looks then like we want to say what would violate that budding uptrend. It would be a violation of this level. So if we bought it at 139 and it fell back down through 125 and we're still holding it, well, our uptrend would no longer exist, so there would be no reason to continue to hold it. So that's where our risk would go, is down near 125. Let's take a look at the potential upside in here. We'll look at this weekly chart, and I'll change the scaling to kind of see where do we have the potential to go. And, we kind of popped up to that level, I guess. If it can push through there, then maybe we've got still room up towards $1.70 or so. If it's truly making, going to make higher highs on the daily time frame as well, I think the stock could probably head up towards 170. So if we buy it at 139 and we risk 14 cents, our potential upside goes 31 cents. Would you want to risk 14 cents to make 31 cents? It looks like it's a risk reward. 1 part risk, 2 parts potential reward. Now, that's garbage in, garbage out. If I really wanted to justify, and this is what some people do, is they say, well, my target's $2 a share, so my risk reward is, not 1 to 2, but my risk reward is instead, what are we going to buy? Let's just call it 140, 60 cents of upside for 15 cents. So my risk reward is 1 to 4. Well, the question is, momentum as well. If you're buying the stock and it's, so you see that volume start increasing, right after you buy it, that's what you want to see. You want to buy based on price, not necessarily volume, because the volume tends to follow the price action, and that's clearly what's going on here. So JTX looks like a decent one to me, Tom. And what did I just see over there? I didn't see anything, I guess. Okay, so cash is a position. Bionic trades. Something is wrong with your mic. We get an echo. Well, here we are 25 minutes into it, and I'm reading the comment. I apologize for that. It's probably too late to fix at this point. Don't know what to tell you. Maybe I should look at that more carefully in the future. Bada44, thanks for the retweet. Shahab H, can you take a look at Wynn, please? Wynn Resorts, let's take a look there. Wynn Resorts had been trying to hold that 50-day moving average and looked like it had a shakeout. It tried to rally, couldn't get to a higher high here, and with the declining 20-day moving average, declining 10-day moving average, it looks like it's on the verge of trouble here. That you could even take a look at on this daily time frame. We could take a look at the Fibonacci and say, well, from this low to that high, where are we? So we're trying to hold that 50% retracement. So that's, I guess, a good thing as well. And now I've lost my trend tool behind this, so I can't get that back, and that's a bummer. But let's take a look at the 30-minute time frame. The 30-minute time frame, we've got lower highs and lower lows with a declining 5-day moving average. I think that the stock is going to need to consolidate and probably at least clear back up above this area here, which looks to be about 102.5. Again, I don't have that trend tool to be able to see it. So I'm just eyeballing these levels. But if it can push back up through 102.5, then it's going to become more neutral. Then we look at the daily time frame and say it probably really, to get the upward momentum, needs to clear these peaks right near about 105.5, 106. So I would say that Wynn you would want to stay away from for now. It tried to come back a little bit in here today, just chopping back and forth above and below that volume weighted average price. But it looks like it's going to have to get probably 102.5 to 103 is what it's going to have to retake in order to think that it's a good potential trade. Radio Caesar, please describe your best trade of the day. I guess I could talk about I think my most profitable trade. Let me see. That's embarrassing. My most profitable trade was actually an FLT. That wasn't what I would consider my best trade. And actually, in my other account, it was in this stock, PIP, Pharmathene, which is something that actually I have looked at in the past, but didn't have my eye on closely today. Someone in my chat room had pointed it out, and he had pointed it out. I mean, it's got a great looking daily chart. You can see it's been holding this rising 20-day moving average and just consolidating in here. But this one was just breaking a little resistance at 371. He happened to call it out at the right time, and I bought some right in this area. Sold some on that rally, and actually bought some as it pulled back and sold it into this strength and got out, I believe, as it crossed below VWAP. But that was a good one because I had a lot of shares in it. I also had the trade I liked the best today was Grupo Financial, GGAL. Now, this is something that's obviously not a trend trade, but there's been a pattern lately of a lot of stocks that have been these real big high flyers that have caught that catch a lot of trouble when they break and close below the 20-day moving average. And this one actually not only closed below the 20-day moving average recently in here, but you take a look at this This is the last 20 days. This is the volume weighted average price of the last 20 days. It broke that before it broke the actual 20-day moving average. So GGAL, I came in, I was thinking it was going to continue down towards the 50-day moving average. So I had gotten short in here and I held it. I got short real early on, right in there, and held nicely throughout the day. So that was probably the one that I liked best. It's it's kind of similar to MOTR, and MOTR, I thought I did a good job on this one a week or so ago when I had the puts and covered them on this day, on this, as it spiked down and rallied back up. Well, those puts that I think. Well, anyways, the point is a lot of these momentum names, when they're breaking these 20-day moving averages, they've had a lot of trouble. At the same time, you look at some of the big cap names like Coca-Cola, which looked like it was breaking that 20-day moving average yesterday, and then really squeezed the crap out of the shorts in there today on KO. So you look at that, it looked like maybe the knockout at the 20-day moving average and break of support here, but it came right back. Alexion was another one that looked like it was going to break down and maybe head towards the 50-day moving average. So as far as selling short these types of stocks, it's clearly not a trend trade, and I find it's better with these stocks that are extended to the upside and more the mid cap type plays. So anyways, I guess that was a good question. VJ Tweet wants me to take a look at UTX, and as we are at a half hour here, this is going to be the last one that I look at. First thing I see is we've got some recent resistance that was broken, and the market's holding that area as support. So resistance is becoming support. And again, all I have is the Fibonacci tool to draw with. So as long as it holds, I'd say probably the 77 level. It's innocent till proven guilty. On the weekly chart, you look in here. Here's this resistance that it broke. Let me see if I can do that one better. So it broke this resistance in here, and now perhaps it's headed up towards north of $80 a share. So UTX looks good, depending on where you're gonna set your stop. We had a shakeout on the open yesterday and again today, so maybe below one of these higher lows, either below the Tuesday low or below today's low, I think would be the better place to put a stop on that. I realize I didn't get to all the questions here, but we are done, and if you want to talk about a stock, hit me up on Friday. We'll be live right at the close Friday. Until then, trade well, and I will talk to you Friday. Thanks.